Hey there and welcome. My name is Patrick Franz, and I'm one of the managing partners of Everly Mae Capital Group. And if you're here watching this video, it probably means that you're looking for a place to deploy capital safely in a way that not only protects your wealth, but it also grows with intention, purpose, and long-term vision. But I built this video for people just like you, active investors who are tired of all the noise, tired of all the gimmicks, and tired of all the hype. So let me show you exactly what we do and how we do it, and why Everly Mae is one of the most trusted family-run investment funds in the industry today. Just thanks for being here. If you are getting enjoyment out of my channel, make sure you hit like and subscribe. But our fund, Everly Mae Capital Group, that's named after my daughter, is a $150 million family-owned and operated real estate fund. And our mission is very simple: to help investors grow wealth passively with real estate secured investments while maintaining absolute transparency, ethical structure, and multi-generational impact, which is the big deal. So we're not a faceless firm, we're a family. Everybody on our leadership team is family, and we operate with values rooted in legacy, integrity, and long-term thinking. So when you work with Everly Mae, you're not just investing in deals, guys. You're investing with people who care about protecting your money like it's our own. The Everly Mae Fund is actually built on two pillars. In fact, the note investment series, built for reliable monthly income through performing first lien mortgage notes, and our development series that's focused on long-term legacy play through ground-up multifamily development projects right in the path of progress. So we have the best of both worlds, a steady cash flow today and, serious appreciation tomorrow. So let's go ahead and talk about the note part of our fund first and foremost. If you've never heard of buying mortgage notes, here's what you need to know. When we buy a note, we're essentially just stepping into the shoes of the bank. We own the debt. The borrower pays us monthly by way of mortgage payment. And most importantly, our position is secured by the real estate. That means we're not exposed, like traditional landlords. We don't deal with the toilets or the tenants or the turnovers. No, in fact, we have predictable contractual backed cash flow, and our investment is backed by a real asset. It's actually one of the most secure, underutilized, consistent income generating strategies in the market, in my opinion. I like to call it the best kept secret in real estate, or one of the best things ever that I've ever seen in my 25 years in the investment world. And that's why notes are so cool. So what I'm going to do real quick is I'm going to share my screen, and I'm just going to show you folks an example of what a note actually is. And you know what? I'm just having trouble sharing my screen. So we won't get into that right now as far as the screen share is concerned. But what I will tell you is this: when we buy a mortgage note, we buy the mortgage debt at a discount. We get instant equity day one. And there's only three things somebody will do with a mortgage. One is they'll pay it on time according to their contract and be a good payor, I guess you could say. They will pay their mortgage off early by way of refinance or sale of a home or something like that. Or they will go delinquent. They'll stop paying a mortgage. Those are the three things that happen with a mortgage. And the way we buy, folks, we feel that we're in a very secure position because we get good discounts on the debt, meaning that if they pay as agreed, we earn a great double-digit yield. If they pay off early, we collect the discount, which ups our yield. And generally, the real estate that's acting as our collateral is worth double what we've invested into the actual note itself. And therefore, there is some opportunity for upside or windfall profits if we ever do have to take back a physical piece of real estate. Okay, so that's how the notes work. Buying one is neat. Owning a portfolio of hundreds of them is fantastic. You spread your risk. There is potential upside. We're able to churn a very, very good, steady rate of return and yield in that fund. And so investors love to participate with us at Everly Mae Capital Group in the note side of things if your appetite is pure security and cash flow. That fund pays out quarterly. So if you'd like to have quarterly cash flow to supplement your lifestyle or to use to compound, that would be for you. The other is our development series. And so this is for investors that are looking, to play the long game, the legacy game. We build multifamily housing in rapid growing, high demand markets, especially right now in Florida. And we definitely use a conservative plan, I guess you could say. It's well structured and it has a well-built exit model, and it's called the Doors to Prosperity program. And I get into it in a little bit, but the idea of being in the path of progress is the key. We hear about location, but there's also location and timing. So we're trying to pick the right location, the path of progress with the proper timing. So the Doors to Prosperity program, I have another video of it here on the channel, but it's really exciting to me. And it is because it's specifically built for investors who care more about legacy than they do short-term yield. It's for people thinking generationally, if you know what I'm saying. It's designed to help you not only grow your capital, preserve it, but also pass it down and use your investment dollar to build a family legacy that lives far beyond you. That's the ticket, okay? It's part income, part growth, part estate structure, but it's all heart. It's from our family to yours. We want other families to be able to benefit alongside us and get the same exact benefits as we do as the operators. And so what happens with the Doors to Prosperity program is we build 2 apartment buildings at one time simultaneously, a larger one and a smaller one. When these 2 buildings are built, which takes about 24 to 36 months, we sell the larger of the 2 buildings, which allows us to recapitalize our investors plus a market rate return on top of their principal being returned back to them in that amount of time. But that's not the kicker. The kicker is, even though our investors have been paid back in full with a fair return, they continue to have perpetual ownership or forever ownership in the smaller of the 2 buildings that we've built. So what we're trying to do is we're trying to create doors for people to own for years and years and years to come, to be able to pass down this cash flow and these benefits of owning these assets to family for legacy. So why do investors choose Everly Mae over other funds? Well, we're very conservative and detailed in our underwriting. We don't gamble on trends. We secure real assets. We have a proven track record. Been in business running investment funds since 2021 and having great success. In fact, I've been calling our investor partners today, and man, have I had nothing but good response. And folks don't have any critique. They just say, hey, this is one of the best investments I've been involved in. You guys are great. And again, guys, we're family. So you're not getting cold calls from account reps here. You're working directly with people who manage the money, structure the deals, write the checks, and, we take your trust seriously. Our entire fund is built, remember, to preserve capital, generate consistent returns, and honor the legacy of every investor we work with. So if you've been looking around for an opportunity, maybe to put some of your capital to work in the real estate sector, managed by real people, built on real principles, then I invite you to take the next step. I've dropped the link below to my calendar in the description of this video. And so go ahead and book a short call with me. There's no pressure, just a conversation. We'll see if Everly Mae Fund is the right fit for your portfolio, your risk, and your long-term goals. So thanks for watching. Subscribe to the channel for more updates, case studies, legacy building conversations. And remember, passive income and prosperity aren't just for the wealthy, okay? They're intentional. So I'll talk soon, and hopefully we can bring you on as a part of the Everly Mae family. See you in the next video.